Okay, now this looks fine. All right, all right. Okay, thanks everybody for coming. Always a pleasure to have you guys around. I hope you're living or surviving through this market obliteration and bloodbath, basically. Um, as said before the recording started, I would just go through some basic charting today, how to get to certain levels. Uh, so the idea is start on a fresh chart and go through on high time frame, map it out, put the levels on, then put some indicators on that I like and draw some trend lines and then go from there. Just shoot in chat if you have any questions about whatever, even if it's completely unrelated and it comes to your mind, something that haunted you lately during your own charting, learning, and whatever. If you have questions or want me to look at the specific asset, I can do that. And yeah, so I'd say until anybody asks something, I would just hop on a fresh Bitcoin chart and would go from there. Maybe take the other one because it has a longer history, which is much better. Whoop. Can I take this layout? Yeah, I guess so. Done. And yeah, don't hesitate to just speak up and interrupt me any time. So yeah, keep a low formality here and just let's enjoy all this. So, for example, if you have a Bitcoin chart like this, I even have it in my category under the monthly, so it's already like, as you can see, pretty much very well filled. And I'm going to show you how I get to this chart of being filled with useful stuff. It's a combination of break levels, hold levels if there are any, trend lines, and then also what I like for my higher time frame charts is the famous tool. It's a native tool from TradingView, which is called Anchored VWAP. I explained it before in another live session. It's basically not just the moving average, but it's uh, volume weighted average price. So it's basically if you have like a moving average, oops, sorry. If you have like a moving average, then it will just be the price and the average X candles of that average being drawn like a line, you know those. But if you use VWAP, it also respects volume, which is the interesting part. And it then even puts you a trajectory to this, which can then extend above price and not like moving averages, which can basically never be really moving alone above price because then it would trend down dramatically, etc., as you know. So I would say we should start on the monthly here with some basic break levels. Especially right now, the area here is of interest, but also for the trajectory where it might rebound back to, or how much lower could it potentially go coming off of this. So I'd say let's start somewhere, like putting a break level here on this monthly candle. And if you don't know why they are put there or how you really put them and what are the rules, again, just speak up or write in chat and let me know. Other than that, I would suggest mostly that you know the basics or have seen other live sessions or educational videos from the YouTube channel that explain those things. And then I just keep going, you know. So, shy. So then we add another one here, and we add another one here. We add another one here. And then this one is also interesting. This one. this one. Here's one in there. Interesting enough, we don't have a lot here because it kept flip-flopping on a monthly time frame between accumulation candle, distribution candle, accumulation candle, distribution candle, and to draw a break level on any given time frame, you would need two consecutive candles into the same direction, as you remember. So that's why on the monthly time frame, there's not a whole lot to gain here, which is also why you can see price has a much easier time to also go down here. But if we zoom in on the weekly or daily, we're obviously full of certain break levels here. And that's also how you could then, yeah, maybe get some refined support and resistances depending on where price would settle. What I did for my entry just, I mean, we are obviously super oversold. I was also looking into this area and I didn't see us going immediately down here just based on the break levels. And so I was adding personally this reverse hold level coming from here, which is basically like, you know, this hold. We have an accumulation candle here and a distribution candle that engulfs completely, which causes a short. That short is already done, but from a technical standpoint of support and resistance, those levels can still act as support and resistances. So yeah, I basically then, it's not on this chart, but on Binance, since I'm trading on Binance. So on Binance it was 62,400, and that's where I started along. I already TP'd it again, but yeah, a bit more caution here, but that's how you can also find certain levels. If you zoom in on the 1 minute, 5 minute, you can see how it dipped a bit more into it. Since it didn't respect this one, I initially was checking if it's gonna hold here on this monthly break level, but it fell right through and then it has to find some support. So I was a bit early and tried to long already here, but then I've seen that it will roll over again and TP'd basically at entry and then waited for it to hit this reverse hold too long and TP'd up here already and now just waiting. Also don't really want to be in a position right now during the session, so it doesn't matter. Just made some money and who gives a fuck. Now can do the session and yeah, trade whatever comes up later. So genau. So I maintained that reverse hold level for that little bounce. Could even develop into a higher bounce, but who knows. So now we basically got all relevant break levels in reach. I mean, there are some down here that not even I am as bearish, but this area here is certainly on the radar, especially 38K. There was something, I guess there was a weekly here that we can come back later to. So stick to the monthly for now and add the trend lines as we know how to add them. So here's our initial anchor, then cycling through the candles. This one, zack. That's our monthly trend at the moment. And then this one. Yeah, this one got kind of obliterated already, so it's not super relevant anymore. And for the downtrend, we can get this one. Everything's super far away. But hey, if a bounce develops around this level, totally legit to go back up in the 80s, like 84, hit something here, fuck around a bit, or even only 74 if it wants to be more bearish. Yeah, we gotta see. The bounce height always depends a bit on the dump low, and it's not sad yet that we found a low within here. Personally, I was looking for low 60s as I wrote in chat, so anything between 60 and 62. And yeah, that's also why I felt confident longing 60 to 400 from this reverse hold level on top, you know. You don't want to long too early, right? Otherwise, you see yourself already down in a day by 13%. So yeah, okay, now we got the monthly trend lines here. And what I like to do add then myself on my monthly chart is anchored VWAP. And the way you do it is you put it on the lowest candle and the highest candle of any given time frame you want to observe based on the prior highs, not of the current highs. I mean, I can add one here, but doesn't make a whole lot of sense since it will be mostly just price trending below some average, so you don't get any useful information really, and you want to take into account the price history and volume history from all the way from here, going up here and then back down, because it's also where like big money and algorithms are sitting and what they are respecting. And you will see later how price usually respects those lines in both ways then as resistance and support once lost or claimed. And yeah, I like that for my higher time frame observation. So June is asking, hi, did the previous rejection of 97K reject off of a trend line or a hold level? That's a good question. It was 98K as far as I know, a bit higher than that. What did it reject off of? Okay, on this chart it was 97. I know on my Binance it was, I guess, 98,300 or something. Yeah, we can look up here. I know there was like just a liquidity sweep, so it's, yeah, we will find a line where it rejected off, but why it did go there is basically just the liquidity that was short. You could, for example, take this daily as rejection from here, it didn't manage to close above really and only swept it, closed back under, and then rejected off of it, and then it haven't had no reason to go there. And this is like the range entrance high. You have like this whole range here. And basically from before starting the range, this is like your entrance into the range. And so it basically already rejected off of here. I know how it looks on the weekly. Yeah, not much to get here for this circumstance. So yeah, I guess it was so weak, it just took the first bearish rejection point it could take, and that was this one here. So I mean, I had this on my own chart, wanted to layer in, and certainly this level here, a bit above 100K. And if you follow daily chatter, I was saying a lot that almost everybody is expecting to go back above 100K. So it's much likely that it will not do this because people will take a minor hit, preferably instead of coping for higher, and short time frame holders had their average at 98K. So chances for it running behind 98K were extremely limited. So yeah, and that's the result, right? So they sold immediately as they hit their break even, and it couldn't manage to go beyond, and then also just used this break level here together with the liquidity sweep or the deviation from this little range here. There was like this range formed, and this is just a deviation from this high to eat all the stop losses, and then actually following the major trajectory that it was in already. Does that answer your question, June or John? Cool. Unclassified dictator NL is asking, what BTC levels are you eyeing for as bottom of the bear? I don't know if you follow chat, but I wrote them many times, even from the top here and also today again. So the level I'm personally eyeing with is like 38K really. And you may be able to see on the weekly here why. It's like before escaping into the higher consolidation, it was the low here. And it also has like good support from the past over here. So that's I mean, how do you know if an FTX 2.0 happens like MicroStrategy? A lot of people say their funds are safe, SAFU. But there's like, to me, it's like a huge ticking time bomb. Also with the 5 companies and all the derivatives. It's like to me, it's like feels like the digital version of this credit default swaps they were selling back then in the financial crisis, where they're packaging bullshit, wrapping it into other bullshit derivatives of more bullshit, and then this forms all a house of cards on top of Bitcoin, which is also already like heavy paper traded and leverage uh, driven. So maybe I don't know enough about like real business finances, and maybe they are really safe. But I mean, what else is Saylor gonna say, right? Or what else is he gonna present? He's not gonna sell his product if he's telling everybody, yeah, by the way, we are not safe. It's all super risky and a ticking time bomb. And if this happens, then everything implodes and I have to sell mass loads of Bitcoin. Why would he do that? So did nobody before him, right? But eventually shit hits the fan, and as soon as liquidity dries up, then how's the saying? If the tide leaves, you're gonna see who's swimming naked, is I guess the saying. And I feel like everything around MicroStrategy and all that is yeah, such a certain thing. If I'm wrong, fair enough, good enough, then I like to understand better, because this bear market will prove if all this Sailor thing is a ticking time bomb or not. And if it's gonna survive, then fair enough. But if not, then if that blows up, then you certainly see yourself down here, you know. I mean, it was a long-winded answer as to why I have certain levels. But at the end, even the worst implosion has technical levels to be respected. It's just if we go back to the monthly and don't have this weekly level, let's say we find ourselves down here. So this area here is like the bullish version. If we speed running the bull run like we're doing now, it's like non-stop down. It's like a super strong speed run. Then I feel like it's all like a super crazy liquidity hunt, and then we could go back up much quicker from here and develop something out of this, rather than like prior downturns where there was like very slow capital unwinding, very slow bleeding down eventually. But yeah, also depends on the other market participants. If more Bitcoin proxy hero companies are gonna start writing their headlines or reporting about them selling and oh, it was all a big mistake and Bitcoin is a scam, and then more trustees lose hope, and then this slow bleeding then actually starts. Yeah, then okay, then this was just the initial kickoff, and here's where people start to make their decisions, and then it actually keeps bleeding down and goes to these levels, then fair enough. But if they find a kicker to go from this monthly trend, then we can justify that, you know, from these technicals around here. And then good, then fair enough. Then maybe bounce a bit higher before going lower, or not even doing that. On the other hand, if more things implode, so if liquidity goes bad, which is not good for risk assets, and Bitcoin is a risk asset, no matter what people try to believe still, it's a very good risk asset. It went to 2.5 trillion market cap. That's pretty nasty, or pretty crazy for Fugazi internet money, to have the GDP of multiple countries. But nonetheless, it's a risk asset, and most people are not married to the Bitcoin. They will just throw it out of the window as soon as they feel their private or financial situation is in danger. And let's see, if all these worst cases happen, then I see us going down there into this area, and then find the lows actually here. 38K is still the level I'm ogling the most with, based on that weekly I showed earlier, and also based on the liquidity coming from longing. It has like, most stuff is until 58. Then we have literally wiped almost the whole market. Then there's a big hole, and then it starts again in the very low 40s, and then below 40, and then it rise up pretty much. And you can see that very well on Trading Different. So can really recommend that tool to anybody to check out, like really higher time frame liquidity. CoinGlass doesn't show that so well. So very obvious bounce will be this area latest. It's either 52 or 47, given that's the dead cat bounce height from the previous bull run, which is a lovely support area on any chart that forms like this. It's unlikely that it will go that low. If something implodes, can certainly do 30Ks, lower 30Ks, fair enough. If not, we'll settle somewhere here. I don't know if my mouse cursor goes too fast. I mean, not time-wise necessarily right now, but could drag a bit for consolidation, accumulation before they push the price back up. They also need to offload their shorts. You got to keep that in mind. Check how much time they have had to load their perps on the short side. Basically 1 year, like literally even 1 year. So it's not really possible for them to dip and then nuke up higher. They need some time to get the liquidity of people putting late shorts, and then they can sell their own shorts that they loaded up here if they go down here, and then they can slowly take profit, take profit, take profit, take profit, and eventually their short side has been unloaded, offloaded, while they are unloading the long side at the same time, and also spot. And that's then how you might get a development of such kind after all. And yeah, I guess that was a long-winded answer, but it's also very contextual. Why do I say that? Because we have the levels. We can even zoom in on the weekly and daily to fine tune it. And if it hits here and starts to build support off of and never goes lower, then in hindsight we can say, yeah, we have this very strong break level. It was the trend sweep, and it was fair enough that it did that. But it's also a line in the sand. If really big stuff is blowing up, then we will do that leg down, in some form or the other. And then we will also say later, yeah, fair enough. There was this monthly hold level, break level, and it did bounce perfectly off of it. So the actual liquidity in the market and the market participants on that scale do matter. And within that context, then you can find the lines where it will go to and not go to, most likely. So if we use a inverse FIB, trend-based FIB extension, for example, then you can also see that like 40K, 4,500 will be very famous level by the algorithms to buy up. And if you then get another dip into that 38K, then fair enough, you know. So then all liquidity is literally wiped out of the market on the long side. The longs down here are not interesting. They're either not large enough or it takes too much energy to go down there. Because if you want to sell as low, you have to sell your assets to get there, and then somebody else buys them, and then you might have less power as the bigger entity that needs both cash and assets to move the price around and get the liquidity on both ends at their own will at any given point in time. So yeah, pretty safe to say that the levels down here are off the table. Again, who knows if everything blows up, COVID 2.0 hits and whatnot. I don't have a crystal ball, you know. But if none of these very dramatic things happen and then things are normally chaotic and normally illiquid and normally bad, then those lower levels are to me off the table. Does that answer your question? Unclassified dictator. I guess so. Otherwise, keep shooting. So chat is writing, will Gemini collapse? And if it's not MicroStrategy, even Cassie would say so many got wiped out and heard they haven't or can't even recover and just got what? And just covering it up for now. Okay. So yeah, anyways, back to the VWAP. So you anchor it on the path behind the range and then run up and run down. You anchor it basically on the prior low and on the prior high. I have it on the monthly time frame for observation, but you cannot really usefully put it down here because within the monthly there are just so many candles that the precision significantly falls off and makes a difference. So we actually have to zoom in. So I put a marker here. And what time is it? Yeah, obviously the 1st December of 2022. So I check if the chart history goes back as much on the 4-hour. Is that right? No. That's right. Okay, it works. So if you want the lowest anchor, as you can see, if I put it just on the monthly, that VWAP, then it will just take, I guess, the first candle within that higher candle and apply it there. But as you can see, there are lower candles around that time frame. So you really want to put it on the lowest candle you can find. So I move the anchor of the VWAP down here and then can go back to the monthly chart and do the same for the highest candle. Oops. And that's November 2021. Go back to the 4-hour. As you can see, not even close to the highest candle, you know. Where's the anchor? Click. So the highest candle would be here, or even here. If you want that extra volume coming from here, then fair enough. It doesn't really matter in this case. I'll take this one. It's close enough of being the same height. And then if I go back to my monthly chart, and the picture starts to form. As you can see, it was also nicely taken, the VWAP bands support going all the way up here, bouncing off of those very nicely, taking off the volume to consideration. Even held the support twice here, and if we zoom in then, as soon as it struggles to really hold it, acts as resistance, nukes a bit higher to set liquidity sweep, and then walks up and down around it. And as soon as it got really nuked and lost, then gets nuked below this band, closes below and then uses it 1, 2, almost 3 times as resistance, keep rejecting it, and then that's then also a very good signal to the algos of bye bye, there's no coming beyond this, so then just sell off. But will also offer us the next levels, and maybe you've seen it on the higher time frame charts I've shared before even all this happened. But being up here, I always had these blue lines and also a trajectory back then when it only draws obviously until the running candle and not further. So what I personally like to do then is take like just a very basic trend line, change the style, something that kind of matches the design or the color of this line to extend this line. In this case, it might look a bit unnecessary because it's almost flat, almost horizontal meanwhile. But as you can see, when it's like curving up and you would like to put a trajectory and you're here just in time, then you're putting it, then it's like different for getting an idea of where price is most likely having a very strong reaction, consolidation at least, and if lost, then also a very dramatic impact. And how do I know? Just by studying charts, but I also have like a cool example for you guys, like for MicroStrategy. It's like a very pregnant example as far as VWAP is concerned. Oops, it's Microsoft, not MicroStrategy. Like here, it's very good visible. Again, same lines, same bands, same principle of anchoring the VWAPs both. As you can see, it fell, tipped it to the penny, get an initial bounce, but it was not the bounce to be actually dying more, bounce on the lower band, and then start consolidating and distributing even more between the two. And you can see how, undeniably it kept holding as resistance once it got really lost, and even got lost under the lower one immediately, creeped it back up, probably against eating just stop losses and then dying back below before then losing actual higher time frame lines and together with Bitcoin, dying more. But it's a very pregnant example and one of many of VWAP bands and why I like them. You can see it even here, how it tap dances. So it's better than your moving average, also because it really takes volume into account, which means it averages out the band according to the volume within each of these candles across the whole time frame, into the latest candle. And where it beautifully called double tipping top on MicroStrategy after the textbook with Euphoria top. That was like undeniably here. And so very good, very pregnant examples of why I like VWAP bands. That's why I also have them on my monthly time frame. So let's go back there for the charting. And if I zoom out now, where are the two lines? Where did the two lines go? I don't know. I put them again. So I know historically what Bitcoin does because I studied it on the charts already. So I just let you know. You can prove that yourself if you want to. If you follow the principle of those VWAP bands. So basically, if you use a replay tool and act like this run didn't happen yet, but you wanted to see how low would this prior bull run, how low would it go? The chart history on this BitGet feed doesn't go that far, but there are feeds that have a longer history with volume, so you can do the same task of putting one anchor onto the prior high, one anchor onto the prior low, which was probably even this year, and then see how the lines form. And what you will recognize is that Bitcoin has this, not less than 100% success rate of revisiting at least the blue bands back, the lower bands, if not dipping even below them. And then there's like a bit more fine tuning possible to get to even more accurate levels. But to me, the monthly chart is more or less like the overview, where it's priced within the bigger picture, rather than like the scalping tool of choice to get like the greatest trade out there in a reckoning day like today. So yeah, what else do we have here? Let me think. I mean, it is basically the monthly chart. If I didn't miss any important levels, I mean, I can add the break levels here, but they won't be relevant for a very long time, if you ask me. So yeah, it's super interesting to get anything out of it at the moment. But yeah, for getting maybe a fine-tuned level out of the monthly range here, we could go into the weekly, check our break levels there, check if we have any hold levels on the other time frames. But the idea was how to map out a chart on like a high time frame, which is the monthly, a good one to start off of. So that's what I was trying to say, to show. I mean, we can add a weekly break level here, but it's already kind of dead below. If it closes back up, then hindsight could want to say like, yeah, that was a liquidity sweep of those break levels. Then we have one here. We have more here. More here. And here. And there. So, if you were looking for like a high time frame, price discovery and to the downside, not quite the price discovery most people would have liked to see on Twitter, I guess. But yeah, it's also an opportunity, you know, for the people that made the wise choice to actually sell, hoard some cash, wait patiently. That's like the opportunity. That's what will bring you a large step forward to the retirement. So all jokes aside, like not even kidding or trying to poke on anybody. I don't want to rub salt into maybe open wounds that are listening or people that carrying wounds. I get it. Also lost money in the past and not even only a little. It's how you learn. But if you made any money and have some cash aside, or even if you only de-risked and preserved your capital, which is even more important than learning how to make money, then this is actually the time of your life coming, because it gives you the next opportunity of swinging all this shit back up, only to see then Bitcoin at 150K at least, That's how it burns. Yeah, sorry, Jay Buddha, I get it, I I can't say that because I also lost high numbers, and I come from nothing and I built myself to high numbers, and losing large chunks of your self-made high number money is makes you learn, makes you different skills, which is not only how to make money but how to preserve it. So yeah, 150 is like a no-brainer, especially with all the liquidity. Then yeah, 200 is anybody's guess. I have the FIB extension just shared in the chat earlier. If I put it down here, up here, and put it to my 38, 40K level target, then just like the current top was predicted by this method also, then you get like a 200K plus, which is pretty reasonable, So just for you guys to see it again, if I apply, oops, let me zoom in, otherwise. Yeah, this way around, exactly. So as you can see, FIB levels are everywhere in every tool, in every metric, in nature, chemistry, physics, charts. So even as simple as that, not knowing a whole lot, being aware of how to draw your best trend, being a trend-based FIB extension found immediately under the FIB retracement tool could have told you like top, right? So longing down here, selling, and then shorting up here. And yeah, you will find those. Good night, Charlie. Thanks for coming. And you'll find those even within ranges and everything. Even, I don't know, if we check Solana for the how high will it bounce for the dead cat bounce thing, then you can find it also here, It will tell you the levels exactly. And I guess if you take the more serious one, oh no, that was when I was talking about like the bullish case of going here, but I didn't think it would go there. So this is still like the proper, where was it? Sorry. Yeah, no, it was actually this, and this was like the psycho run up. So this is like a technical high, and this is again just a deviation. So yeah, you can see how it keeps rejecting off of like golden pockets in this. So if you want to have like solid Solana targets, then you can also do that inversely from here. Always have to think for a second where to put the anchors into both directions. I guess like this is it's a bit harder on Solana because it went all the way down to $8. So let's check if we get anything useful out of this. Yeah, then you're already quite there. I mean, it's in a monthly break level anyways, 75. What do you get if you take this one? Not the greatest. Yeah, have to dig a bit deeper for this example, just trying on the fly here, but yes, given the fact that Solana did run a bit too low on the prior cycle. Let's say, like the numbers shared in chat, if it settles somewhere in the low 30s, there are realistic target 300 plus, and then bull copium, and if still successful, 500 and whatnot. Oh, but I'm going a bit off the rails here. So what did I try to say and show? Ah, yeah, the monthly. and a lower target for Bitcoin, which was coming from this and this. And this also like puts more confluence on the idea of not that it will go there 100%, but if it goes there, there's a extremely high likelihood of insane buying will happen there, because the most patient and biggest money will sit on those numbers, on top of those, and will buy the shit out of those numbers, given the basic principles of these accumulation, markup, distribution, markdown cycles, which are involved into all those fib levels that algos also trade a lot of, and a lot of micro fib levels eventually cause higher time frame fib levels, cause even higher time frame fib levels, and then thus it gets a self-fulfilling prophecy in the end. So yeah, if we invert this now from the other low to the high again to that, what was it, 38,500 on this chart, on this feed. So if you put it here, then hey, what do you know, 150 is even shown straight into our face, one important level, then 200 plus. So what I'm trying to say is, if you didn't sell enough, I get it, it hurts for those that sold at least something, or there are even winners between you that I know of. So that's some time of your life that is upcoming, because it's basically an opportunity to buy for making even more money than if you go from 38K, 500, let's say 150. That's like a 300% beggar on a relatively safe asset for speculative area. If you go to the 200 area, 200K, if not higher, then it's a 400% gain. Not the worst thing to wait for. So what do we got in chat? No, Sid never promised 1K plus. That's for sure. He was always making fun of it and called it the MERT trend, because he found like one range trend that was allowing the idea to hit that, but you have more lines on the chart that will not get hit or get hit much later. So I think you're probably joking, but yeah, Finn did never promise any such high numbers, and I remember very well him calling out 253 to be exactly price, a highly polarized level and highly convincing level of price reversal, and then see what happens after. And what do you know? It was like the dead cat bounce of the dead cat bounces, and the ultimate high of this macro lower high, given the fact that Solana went to 295 before and then only went to 253. So yeah. Yeah, we cannot do much more on the monthly here, given the downtrend is currently this, and we have absolutely no accumulation candle in between that we could draw on. Now I'm losing the word. What is it now? Subsequent trend? No, what was a word with an E? Now I'm losing my words. Yeah, whatever. Like the trend within the trend if you have the accumulation candle, and put it somewhere here. But who knows? Maybe the February closes still back up. Wouldn't that be interesting? And then we get a proper downtrend in here also. But other than that, coming from this, we don't have much more. And we got to work with the break levels in between here and hold levels, because there are like unused hold levels. And for example, like this one, it's ever so slightly, but it did miss on this one here, on this chart. So that's a weekly hold, for example. And we have the monthly trend here, we have the break levels here. So this is also like super valid. It's even, if you look precisely, it's between the two VWAP bands, which will have certain consolidation anyways. So if it dips here, maybe dips a bit lower, consolidates here and builds the support out of, then that's fair enough, you know. Going for another that can bounce lower high, maybe take a bit longer this time, and then roll over, unless this macro supports the idea of keep going higher, then yeah, also fair enough. But yeah, I would take those for granted for being high conviction areas for algos to buy. Hakuna Matata is asking if I can do the same for Solana like I did for Bitcoin just now. Yeah, sure. Let's have a quick look on my monthly that it is already in place. It's very clean. It's completely mapped out just to flex, and then we build it together to get there. Magic, so many lines. Remove the drawings, go to the monthly, drink some water. All right, so let's start with the break levels again. We put one here, we put one here, which is basically the origin, which was rejecting then the highs here, you know. We put one here. Okay, this is the actual origin. This is just the subsequent one, if you ask me, to reject the lower one. But yeah, we put one here. Then we have a lot of piano game in here, so not a lot of break levels. Also why there's not a lot to support price really, and just hot knife basically through it after this level here was lost. And now this is the ultimate low to be lost, which is very painful. You can already see like there's absolutely not a whole lot to really catch it, but we have luckily at least one line, which is at 75. And put one here. And put one here. Do you know why I'm putting them? Why I put there, Hakuna Matata? Or shall I explain?
I was actually just about to ask for the last one you put on the lowest one you put on the yellow candle. That one didn't engulf the one before it, so why is it that candle? Or is it because the next one after it did engulf it?
It's because you have a range of two candles, consecutive candles, going to the same direction, creating a range, and therefore you put a break level under the lowest wick of those same direction candles. And And it's like basically also like the same here, right? You have a distribution candle and a second distribution candle. So therefore, this one gets added a break level, which is then even converted to an origin at first getting hit here, but not closed above. And then you even get a second one down here, but you never get a break level on the bottom side, on the monthly at least, earlier than this. And it only starts to form here since we have two consecutive accumulation candles in a row. Same as here, even if it was just a doji and that was so slightly and very thin, you have two consecutive accumulation candles, and therefore you put the break level here, put a break level here. I mean, it got hard closed already below and it got hard closed above. But, sorry, can you say that again? It was very laggy. Okay, maybe it was just background noise then for him.
Because his mic's probably not working. Okay, so it's the same candles in a row. The size isn't as relevant.
Correct.
Okay.
And if I didn't forget any, here's one not so relevant at the moment.
And I guess while we're on it, is it always the bottom or top of the wick, or do you ever put it on the actual body?
No, the body is only for hold levels, and the hold levels are like immediate engulfments, like this one, like this distribution candle got engulfed by this accumulation candle completely. So you would put a hold level here and have it as a long. So if we go like on a new layout to make this specific example easier visible and not so confusing with all the lines, take the replay. Let's say you are here and you have a hold level here because of this distribution candle. Its body gets completely engulfed by the next candle, which is an accumulation candle. So this creates a hold level as creating a long with the entry at the body and the exit at the fib level 1.618, and it's generally support. And then you can have the fine tuning of zooming in and look if you find even a weekly level below this entry, or a daily or 4-hour or 50-minute, how depends on how low you want to go and how much you want to fine tune and how much risk reward you want to squeeze out of this. And then it will act as a strong support area for being an untested and unconsumed hold, because you can see this wick did never touch this line, so it's still pending to be hit, so not active, and it can be used later. And that's a case where you put levels on the body on a long, it's on the top side of the distribution candle, and for a short it would be the bottom side of the accumulation candle, like here. See, you have an accumulation candle, body gets completely engulfed by a distribution candle and therefore creates a hold level with a short from the entry of the body from the accumulation candle down to the 1.618 level. In this case was high risk. Not only hindsight, seeing that it didn't immediately happen and visit the exit, but also you usually don't want to trade engulfments that are only consisting out of a single candle. You usually want to wait for a range to form, which only starts with two candles into the same engulfment direction, like this. You have one distribution, you have an accumulation candle, it creates a trade, it will complete eventually, But the second accumulation candle really makes this a very high likelihood long then also later. And this one was just a single engulfment and then it reverted already and closed in accumulation again. So yeah, I mean, we are already much lower, so you know the trade is completed meanwhile, but yeah, it would have also, if you were in high leverage or a lot of capital allocated to this short, then you would have waited a long time for this short to complete. Let me pause again and add that hold level actually for the long to your question. Oops. Yeah, I draw a new one. So here on the one hand is like the short exit, and here is like a new long entry being a hold level, right? So if you were on a short from 146.37, probably hurting a lot already, but let's pretend you were strong and had conviction that it will eventually hit the exit anyways. Then you would have gotten the exit just now. And the long, I guess, comes soon after, I guess in the next monthly. Yeah, now you can see it tapped the hold level for this long and created basically this trade from this entry from 101.84 on this feed to back to 150.99. So yeah, this was a quicker one, also was low risk. This was a high risk one and also took very long. Doesn't mean that all high risk ones always take infinite time to play out, but there's a reason why we have 3 categories, and especially out, you would probably like to avoid high risk trades. And honestly, in the grand scheme of things, trying to short this on the monthly level, not the worst idea in general, because monthly levels generally have a stronger impact. But especially if you're just exercising and starting out, this is your current trend and you try to short against the trend. So on top of this being a single candle engulfment only without a proper range yet, you would also try to trade against the trend, which can hurt at times, So long story short, hold levels on bodies, top or bottom, long or short, break levels or origin levels on the wicks, and they only can exist when you have 2 consecutive levels into the same direction on this time frame. So what do I mean by that? If I try to, let's say, yeah, let's take this example. This candle here, it's only a single distribution candle. So on this time frame, on this monthly, I cannot put a break level here. But obviously, if I zoom in, I will eventually find, just like now, within that time frame, a break level just a bit lower, but around the same level. Weekly, for example, because I have 2 candles to the same direction. And if I had to guess, I would probably find on daily or somewhere here the actual proper level, which only created the rejections here, if that makes sense to you. So actually what happened is something in here created the rejections here, which then subsequently create their break levels. But they didn't do a whole lot on the weekly scale here. Doesn't mean it didn't do anything on 50-minute, 1 hour, 4 hour, and it's more often than not, if not almost always, it's about the first tap, immediately hitting your entry, your trade, and then taking profit somewhere according to the trade you're in. And then that situation is clear and it's done. Sometimes you have multiple taps or endless taps. before it decides for direction. But highest probability about trading is usually first steps, because that's also where like the most highly efficient algos will agree on price to do the same action before they recalibrate and decide to then do something else later based on other metrics and other candles and more candles. If that makes sense to you, what I'm talking. So on the weekly, you would have break level here. If I go back to the monthly, you would see there's none. But doesn't mean that there are no break levels. Just for the idea, if you map out a chart for yourself to have a higher time frame overview, I really like it to do it on the monthly, to also see which levels do we got that might get respected compared to others. And yeah, what do you know? I mean, we can immediately go lower. It should get at least some form of bounce. I mean, how much more oversold than this do you get? But you also see like how ruthless the algos and if like their most significant levels are lost. It's like we only lost it today, right? It was yesterday. We're still fucking around up here, those price levels and deciding. And once really lost, then, yeah, it's actually dying immediately to the next levels. I will draw out the monthly after I answered the other questions, Hakuna Matata, if you don't mind. Then I keep going on this.
Yeah, for sure. That was helpful. Thank you.
Yeah, I mean, you pick that's like the brutal part of trying to long, it's all time frames are pointing down, so you're trying to trade against the trend. And sometimes there is simply no trade. I know we only have two buttons. We have a long and a short, and price from wherever it is, it will either go down or it will go up. So it might feel like there's always a right answer, and technically there is, but it's honestly smarter to sometimes do also nothing. If you missed out on shorting into this obliteration, it doesn't necessarily mean you should feel the urge to find a long all the time right now. If something shows up, fair enough. Maybe you can long Sol at 75 roundabout, given the monthly level here. Maybe you find more levels that would support your idea. At the moment, what would be to me a bit smarter, especially if you're worried, which is not good to begin with if you try to trade, because then more emotions are involved and then you start questioning your skills, like you said, which doesn't help anybody and especially not yourself. But there's like the saying of wait for the trade to come to you. And if price just keeps dying and dying and dying without you being in a short, such is life. I would suggest that most people also missed all this pump here and then started longing up in the 150s when they could have also started longing in the $15 prices. What I'm trying to say is, from where we are, the major trend is obviously down. So if you're especially worried and questioning your skills, then just step back, do nothing for a moment, use that time to educate yourself, use that time to open up a chart, draw it out from the beginning, from bottom up, maybe start on the monthly, maybe add some weekly levels, maybe add some dailies, add some trend lines, name the lines properly. You set your templates up, get yourself familiar with with layouts and everything. Maybe find some other assets that you don't have on the radar yet, but that could be interesting to chart and put alerts on. And then wait for a short to show up, because that's the major trend we're going in. You want to long, but the chances of longing here right now, if you're already nervous and questioning yourself, are not really cool. Does that mean the price will definitely go lower? No, that's not the same thing. It's just if you don't have conviction about your trades, getting a long in, doing a market-wide de-risking and sell-off, then fancier things than this can happen. So if the 75 level doesn't hold, I can almost guarantee you that the time for going into the next leg down, maybe we find levels in here actually that would support an earlier bounce, or here. But overall, the leg down to those lower levels is super likely, and you don't want to find yourself sweating over a long that you haven't had conviction in the first place about, then seeing die away again. So you could do the things that I said, for example, and it's not just blah blah blah, it's actually how you learn the craft. You have to exercise, and you have to find those lines, and you have to find those price points, and then put an alert onto Solana. And if it hits 90 again, then you have like the perfect retest and justification to short, because what are we looking at here, on a monthly time frame? I mean, it's just intraday and intra-month candle, still losing it, quote unquote. But nonetheless, even on the weekly and daily and 4-hour, you will find all those range lows to be your lows in some form or the other. So it's not only like the monthly level just now being this, and it will close back up and now you're screwed. No, there are like more levels. We have this dramatic sell-off because Bitcoin and Solana lost, and probably all the other assets also, or they're just following Bitcoin. I don't give a fuck why they're dumping, but Bitcoin is basically losing its mind in this rapid pace because this low got lost. It's like, okay, the general market idea of most algos and most people, and even those that cannot chart as precise as we do it, they have the idea of high, lower high, higher low, then higher high, higher low, higher high, higher low, higher high, higher low. Then eventually, lower high. Are we gonna make it? Okay, higher low, lucky enough. Next high, then go back low again. Make a lower high. And then, not good. Okay, now we got a macro lower low. And what do you know? Then, okay, fuck this shit. I'm gonna sell everything right now. I'm gonna de-risk, panic. We're gonna go to zero because the structure has been broken. And yeah, that's literally what we're experiencing just today. So that's why it's so fast. That's why it's escalating so much, But it works the other way around, If you remember those breakouts here, or those pumps from those lows, it's also like, okay, if you break this level, being the dead cat bounce height, rejected first time, very natural, but then actually probably on a daily or weekly basis, close above it, and then boom, what do you know, get like the mega nuke up. Like, what was it, 50% in one go? So not surprising that you get the same, right? It's not even that bad yet. It's just, yeah, it hurts. I get it. It might be annoying and suck, especially if you hold a lot still, but it's also not like super out of the realm and out of possibilities given what we've seen also in the other direction. Yeah, I don't know. Does that help at least, Evil Pick? There's like no receipt answer to how can I long right now here, because Even I'm not really long. I did long one line, 62,400 for being the reverse hold, at the same time being oversold on the 50-minute, 1 hour, 4 hour daily and weekly. Looking at the liquidity, I was trying to get in from 60,800 and 61,300 based on the liquidity on top of those facts, but then I also got to respect the lines, and that reverse monthly hold was good enough for me, seeing the volume at this moment in time consolidating into this line. I can see it's even holding again. I mean, on this feed it's 62,700, but on my Binance feed, where I'm obviously trading because that's where my trading platform is. So I go here. Yeah, I mean, didn't get better than this yet for entry. Just got revisited. Does it mean it will hold? No, it was just for scalp, you know. And since I looked to long this but didn't, and then it actually even died through it. It was a good opportunity to long here and just TP here, and now it's deciding, am I resistance, am I support, am I resistance, and eventually one level or the other will win. And there's a bit of more liquidity down here. It also coincides nicely with the daily trend. So trying to long between those two levels, if not immediately at this level here, will also probably work for a scalp. And you can do that, but I would not recommend to do it if you already feel like you don't have conviction, and then you should maybe take a step back and wait for a short to come up, you know, because these market times can be really stressful, and it would rather lead to you eating more stop losses or eating more panic exits just to see exactly 2 minutes later your trade would have been in profit, then you chase it, re-enter, price rents back against you, you exit again, you eat your own manual stop loss, then you would have been right again, and it causes double whammy, because not only you're missing the gains you thought you would get, you also lost a bit of money, which is not a whole lot yet, but then you escalate your head and your emotions yourself into doing the same thing 10 times in a row, and instead of losing $300 over a larger swing, you lost 10 times $30 within a super tiny range, just because you went in, out, in, out, in, out, in, out, and let your urge and your emotions win over your portfolio management and money management, which is usually a good time to go out with the dog, or I don't know, yell at the kids and wife if that helps. Or just touch grass, you know. Basically, just do nothing. If you feel like it's not your moment in the market, then it's perfectly okay. It's the market is not designed for you to do something all the time. Big leg downs between major levels, you know. It's not an accident that those levels are here, and when they get lost, then you get an insane escalation to the next level, you know. Doesn't necessarily mean you should immediately long it. Can I borrow someone's kids to practice? That's a good one. But if it gets a retest, a proper one, then you can try to short it at least, you know. Even if it hurts to short into such oversold level, can work for a scalp. And if this level is now lost with high conviction, then also that retest will not overcome it dramatically, you know. So yeah, there should be a long here, I agree. But if you don't feel like you can do it right now, then you gave yourself an answer, and maybe spend that time with exercising, educating yourself, rather than trying to urge into a trade just to feel something like a addict, and we are all addicts. Otherwise, we wouldn't be here. But we can only try to get some discipline about that addiction. So. Okay, Biggie is asking, Blue, can you explain the high probability part again, please? Oh, high probability part. I guess we were talking about the monthly on Solana. So let's go back there. I wanted to draw it out anyways for Hakuna Matata. Great song, by the way. Carried me many times throughout childhood. I loved singing
And throughout this throughout this bear market.
it. Yeah. So, what is a high probability FIB trade on a very basic level? We have longer live sessions about it where I explain them like in very, very deep detail. I guess number 16 and number 18. Big recommendation, got a lot of good feedback. Clear rewatch. Nonetheless, I'm gonna go through this a bit again right now. So what makes a high probability FIB trade consists at least, I mean, to be created in the first place, you need what? You need one candle that gets its body completely engulfed by the inverse direction. In this case, the distribution candle gets engulfed by this body by an accumulation candle. For it to, so that creates a trade, and the backtesting of this completing eventually, there's no claim of how long does it take. The backtesting just says you get a 99% chance, even higher, 99.8% chance of getting from your entry to the FIB level being the 1.618 level for your long. As soon as price hits here, you get your long and your exit will be here. So that's all that the backtesting says. So, but obviously smart enough to see that, yeah, like this short here, for example, took ages to play out, like shown before. So there must be a caveat, you know, just because the backtesting says you get your exit with this high chance, there's like conditional trading behind that, where taking one trade makes more sense than taking another trade, which is this short not taking, and taking this long made more sense. And how can we determine those rules? So what we found out is that if you get two candles, consecutive candles into the same direction after the trade has been created, so just the thing we're looking at, you have the distribution candle followed by accumulation candle, body gets engulfed completely. So number one, engulfment. Make an acronym with E and G, very dirty. And number two, you want two candles. It's very ugly. Could use text boxes into the same direction, which is part of the condition how it becomes a higher probability trade. And then what I like to prefer, or it should be generally be preferred, is being with the trend. If you have those first two conditions, then you want also the trend to be your friend, which gives you a very high likelihood of your trade not only completing profitably, but also to complete very soon and very timely. If you have those three conditions met, and that's how you get like the high probability trades, you know, which also explains you why you were not getting a good short out of this setup here, because you only had, so condition one, engulfment, check. Condition 2, 2 candles into the same direction for the trade. No check. You only have one distribution candle. It's already medium risk, maybe going from here, if not high risk. And then 3, you also don't have the trend because on the monthly time frame your trend is up and you're shorting. So if you do that on the 5-minute, 50-minute, 1 hour, 4 hour daily, it doesn't change. The rules are the same, the engulfments are the same, the targets, the fib levels, the drawings, they are all the same. It's just that on the monthly there are not a lot of time frames that could interfere you of being much higher time frame. Yeah, we count 33 days, 35, 40, 50, 60, 70 day and whatnot. Sure. But you have to start somewhere, and therefore the monthly, weekly, daily, 4 hour, 50-minute, 1 hour, whatever, are good points to start. And if you have mapped out already like your monthly and weekly and you're trading like a 4 hour and daily within those frames of references, then you're already much better off than compared to not doing so. And then you get also like the high probability trades of which trend you are in, and if you're stuck under a trend, what's really shitty is if you get exits behind major trends. For example, do we have something right now? I'm afraid not. Yeah. Anyways, the idea is if you let's say you hit a long here, that would be extremely far, just for the example. Let's say you hit the entry here. Wait a second. Like this. I have to go a bit further. Okay, like this. Let's pretend there would be a long here, and you hit the entry here. And it would hit somewhere here. That's a good example. The entry hits at your trend line, but the exit is beyond the downtrend. That's also like not a good risk-reward ratio on those trades. They will happen, but you will find it many times that you have. Let me try to actually find a better example that's not so abstract. Like on the 1 hour. Maybe 4 hours easier. The wicks are bigger, the candles are bigger. I feel like there was something that I remember. Yeah, maybe you can have this one. Let's check this out quickly. Didn't forget about mapping out your chart, Hakuna Matata. So let's draw this for our. So that's your downtrend. Just locally, not knowing about anything else. That's your 4 hour downtrend, and you have a long here. And if I put in a, if you don't see it, I zoom in a bit. So you have an engulfment here. Yeah, this distribution candle gets engulfed by this accumulation candle. It even gets a second candle. So remember the rules. You have the engulfment, check. Number 2, 2 candles, same direction, check. And 3, kind of locally trend, you know, is up, fair enough. But you will try to probably long beyond the downtrend with your exit after the entry has been. So that was a lot of words. What do I mean by that? You have your downtrend here locally from the 4 hour. You know, it's self-referential. I'm only drawing out the 4 hour here. I have a 4 hour downtrend. I have a 4 hour long that got created here. And if I drag the fib with the keyboard over, you can see the entry didn't hit here, didn't hit here, didn't hit here, and so on and so forth. It only got hit here. But the issue is that your exit is behind the major, quote unquote major, like the predominant is a better word, the predominant trend, which is this downtrend here on this local space. So you would try to long against the trend, which is like, but isn't my trend? Yeah, trend is like the most complex thing in the world, because if you could resolve that on every given moment in time, you could make infinite money, basically, knowing always your trend. Because this is an uptrend, but if I zoom out, it's actually a downtrend. And if I'm in this smaller uptrend, I still have downtrends like this. Yeah, this kind of, not really on a micro scale maybe, but this is certainly a downtrend again in that uptrend. So I know if you get the explanation of not trying to long or short where your exit is behind the predominant trend or the major trends, then fuck no, then especially not. But even if it's like local trends, you would rather just not take it. It's not always about making money non-stop and hit every trade. That just makes you nervous. It's about making money on the high probability trades and understand why you took them. And I hope it's understandable why you would not take this trade, because your entry is hit here. And then for it to get to your exit, it would have to fight against a major downtrend. And even if we are honest, oops, I need the magnet tool again. And even against that local break level. So you have like two major things that are not in your favor of being profitable, where I would even say the trend is the more hurtful one compared to the break level. But yeah, there are different charts, different situations. So yeah, I don't know. Did that make sense to you, Biggie? How this is not a high probability trade, but the long on the monthly was a high probability trade. Cool. Glad to hear. Yes, or do exactly all of the above. No, no house beating. Not fun. Don't do that, guys. Okay, look at Sol 2 hour. Would a small reversal signal be a full engulfment of that last 2 hour candle? Then retest the 89 for safer confirmation of some upside. So what are you trying to long here? Like if this 2 hour would engulf here, then this to you, if that's enough for a reversal. Jay Buddha? Yeah, shorting is very counterintuitive. I get it. Very understandable. That's also why most money is lost in longing. Also, shorts have like infinite, how you say that? You need you could need infinite capital to collateralize your shorts. So eventually, all, let's say, non-zero value asset that have a up into the right trajectory given the inflation and people in game theory eventually mutually agreeing to buy those, which is all that the stock market is about basically. And crypto on like a psycho wild level. That all shorts will die anyways, so they are rather for hunting longs because the long and the very lows will never get revisited unless something literally dies as a project or company. And also like the basic nature of human is at least somewhat trying to be positive, so you naturally want numbers to go up. So betting on short, so number going down is very counterintuitive. And also your short upside is maximum 100%, given that any asset can only go to zero, no matter where price is at the moment. So you would have to apply some leverage to make it much more worth. Where long has, again, on an asset that goes up and to the right, technically infinite and can stack up multiples over different cycles, periods of accumulation, markup, distribution, and markdown, and those market cycles. And eventually your long will compound on its gains on and again, Basically like buying Tesla for $1 and now finding yourself at almost hitting 500, you will never again find an entry of how you can replicate a $1 entry on Tesla, no matter where you buy, because when you buy a $200, you will not get a 50,000% gainer. If you ask certain people, they probably still think is it possible to go from $200 to 50,000% gain on Tesla, but let's not start this. So yeah, I get it. Shorting is very counterintuitive, but on days like today, you would have loved to short, right? So it's price can only go up if it goes down. So it's very natural that you would at least try to short, learn to short. But it's also understandable that it's very counterintuitive, feels unnatural and a bit weird to do so. Just keep in mind that the longs you are waiting for are coming off of shorts that are running, So just try with small money. Let's say if you're trading like $1,000 positions, just imagining or making up any number. If you're trading $1,000 longs all the time, be your base position size, then hey, go with $100 shorts just to exercise and to get used to it. And then you're also much less nervous. So scale down. If you're using leverage, just use no leverage at all. So if you use leverage on your longs, don't use leverage on your shorts. Back question? No, if that 2 hour. So as you can see, I've already drawn out like the trends here. If I let's pretend for a second that would engulf, then where's the wick gonna be? Somewhere like here. So the downtrend would form somewhere like here. So yeah, you can try to long it, but hey, what did I just explain? You're basically trying to long trade against the trade. So if anything, you want to be patient, and if you get your chance on a bounce back here, then you would try to short it until proper support is formed. I would not really long here based on a single 2 hour candle without any context. If you have your monthly, your weekly and whatnot drawn out and you have other trends to get you to the idea that this is an applicable low and a long to fall off of, then fair enough. But if you're just trying to make a long out of a 2-hour engulfment from here, then that's a very, very rough and easy no. You have an engulfment that creates a trade, but you don't even have a second candle yet to form the range that I was talking about. And you're trading against the trend, which is undoubtedly down. And you're probably when the next trend comes here from the wick, however high it is, would be like this, and then your entry on that long. I'm picking this to. Then your entry on your long would be soonest on this candle, and you can see already how your entry would hit here, and then your long exit would be beyond the trend and against the trend. So can it happen anyways? Yeah, sure. It's all probabilistic. It can also like do dip like this and then do this. Is it likely? Do you want to bet on it? That's where you make the money and lose the money, That's the difference. So no, I would not say that this is going to happen or likely to happen what you tried to have as an example. Okay, if I didn't miss anything, then so far the questions chat seem to be done, but let's go back to the monthly. Okay. So yeah, basically what's missing right now, we don't have any outstanding hold levels, like really. I guess this one got also eaten up, if I'm not mistaken. Yeah, it was actually the perfect entry to get, even though it was not even a proper form range, but yeah, you would have probably found on a weekly level also that this is like the proper long to get off of, despite the fact how massively oversold that soul was declared, and I certainly accumulated at 11 and 13 was my second buy, and then 20. I bought so much endlessly for 20 before we nuked up constantly. Anyways, so the trends are missing here. So let's do those. Go on the first anchor on the lowest candle here. Cycle through the candles. Put the second anchor here. Next candle is below the trend, so we move it. This candle is below the trend, so we move the anchor. Now we put the next one. First anchor starts here, and second goes here. And then we even have a good old range trend in those lows. So let's add this one. And then from the top side, we start out here, go to this candle. Downtrends can't point up, so we move the trend to here. Add the second anchor here. This candle sits above, go here. Next candle sits above, go here. And I liked to have this still on my chart because I like to preserve certain trend lines. And this one also gets added. And from here, what do you know? No accumulation candle closure ever since. So we cannot really draw another trend line from this. So that again makes very attractive that if we lose the 75 level, since there's not a whole lot on the monthly time frame at least to keep us afloat here, that at minimum just below 40s will be revisited, if not decent low 30s, and then latest settle somewhere here. Same explanation as like to Bitcoin basically. Always depends on how many market participants on such large scale literally blow up and drive the price then lower to explain why one higher time frame line was chosen rather than another. If it bounces off a weekly here inside, as I showed earlier, also fair enough. So I guess the level was somewhere here, like within there. It's like the low 40s. We have an inverse reverse hold level here also on the monthly. Can also act as support, aligns decently well with the break level here. So yeah, if they want to use this area here to actually find the lows for Solana, then that's fair enough. We don't get a whole lot out of the RSI because it's, yeah, it just died through all. Oops. Let me get my normal yellow line. You know, there's like literally nothing to catch it anymore on such high time frame. Got perfectly rejected as shown back then when it did happen. It's very sad basically for the bulls because intra-candle it went all the way up here. Also on the weekly and daily. Very promising, and they nailed it back down to have the monthly close exactly under the resistance. And so Destiny was calling it's over. So yeah. All right. We did Sol, we did Bitcoin. Should I dig a bit deeper into like fine-tuned levels around those lows or in between, or if any other questions, also completely unrelated, is welcome. What my favorite color is, or dish, or how the weather is
What is your
going.
favorite color?
Blue. Haha, who could have guessed?
How did no way?
Absolutely unpredictable.
So just going back on what you just said here, if the 75 level was broken, there's not much to catch it. So would that not be, once confirmed, a good opportunity to short if it were to hit like 60 or below, to short it down to the 40s?
Yeah, that's always the question, right? Especially when you're already so like super oversold, because, and that's where being like on
Yeah.
top of the updates from Sin is also super valuable, because there will be more time frames at hand. But if you get, and he will then say it again, I didn't watch the video from last night yet. But I guess if I could imagine he said like, oh, they closed the daily under this level and now they could technically reject immediately off of this break level, which they did. And that's the same how they ladder down then, right? So it's a fair enough assumption to say if we close another daily down here, doesn't need to be like today. It could be like any day, I don't know. Let's pretend they bounce around for a bit and they put a daily down here and close it under, then they can perfectly use this and reject off of immediately, just like they did here, and then it's a short. I am personally not the biggest fan of doing such shorts because whenever I try it personally, doesn't mean that others don't have success with it. I usually get caught up in traps like this, and they can hurt like a lot. You see where like Solana closed times below this very important break level just to troll and actually not mean it. So I prefer for my shorts not to chase them as much as I don't prefer chasing longs. Same idea would go inverse if price fucks around here, I don't know, bounce around. And if we get a daily closure here, technically it's reclaimed, but I'm not the kind of guy, and it's not my risk profile to then open a long, and then be like, okay, yeah, we reclaim this and we definitely going higher, given the fact it's not even hard closed yet. The unfortunate thing and reality is that you will basically miss out some of the trades because the loss of this break level is only confirmed by today's hard closing below that level. But what do you know? The short already played out at the same time. So trading exactly this, what you asked and what we're looking at, and you will find more times on the chart. I personally dislike it because I simply like shorting from higher prices and longing from lower prices. So if anything, I would try to long around here. And the best longs and shorts come beyond support and resistance. For this level to be really lost, you would have to close below it and then hard close it. It would hurt a lot if the same situation happens like this just now, where you close below it and your hard closure is already like the giga nuke, to confirm it. But your chances of longing below support and shorting above resistance, the more you do it, the more you see like the pattern of how those sweeps are always a deviation and grab of stop losses, just because of those very easy, understandable rules that, if we go here and reject, then that's resistance. But if we go higher, then that's where everybody has their stop loss. So what do you know? Price dips a bit higher and then means a rejection. And then price goes a bit lower, grabs all the stop losses, but didn't mean the dump and closes back above and uses this as support. You've probably seen it hundreds of times already if you exercised enough. So coming off of that, I would personally, for my trade preferences, be an idiot to try to then open a short here. I could think about shorting this area here. You can see the lines are already like kind of self-explanatory for being resistance and high time frame resistance on monthly scale. So if we fuck around and find ourselves getting up here, my risk to reward ratio of shorting then into this support before maybe doing what we said, like break below, then use it as resistance and then fall off, my risk reward is much, much better off. And if it all happens without me, then yeah, fair enough. I don't catch every trade. So name of the game is, like I said in the risk management live session, number one should always be preserve capital, which means try to hold what you already made and not give it back, despite eating some stop losses and some losses. It's like super normal part of the game. Then find probable setups to make money and make more gains that will pay for your next X losses, which then leads to compounding gains over a longer period, because all future losses are already paid with prior gains. And if you stick to that, then technically you should not ever get into like a minus graph, you know. It's like this ego thing that people hold on, and I count myself to that and did those mistakes, certainly. That just because you longed right now and you shorted, immediately ego kicks in, be like, yeah, now I deserve the gains, and I gotta be right because I hit the button. And then 20% against your P&L, you realize, shit, I was wrong. The market just told me I was wrong, and why didn't I exit earlier when I had no conviction anymore about my trade? So it happens. So the left is hold level here also behind. So they have like many reasons to, I don't know, if they do it, if they even give a breather and fuck around a bit, sweep both those break levels on the monthly scale again, hit that daily hold even, and if we zoom in, then probably find another time frame also. So let's do that. Yeah, can immediately see a 4-hour. 4-hour hold level. You know. And then same old story. Do they use it immediately to reject? If they do, it's probably here. If they go here, chances are even higher they sweep a bit the break levels and trend. So eating basically also all the stop losses of late shorters here, also with a psychological level of 100. That's also why I like layering into positions. Like the daily hold is here, hit your first layer, monthly trend, and 4-hour hold is here, hit the second layer, and then have some cushion left to hit the third layer of the potential range sweep of the late shorters, and that DCAs up very well into a decent short. That would probably, if it turns out to be wrong, let's say it's an honest reclaim and they go higher, will most likely get you a retest, and then you get an exit on break even without any loss. So did that answer your question about like shorting a lost break level and or also inversely longing a reclaimed break level?
Yeah, and like you, I wouldn't actually be shorting at this much overselling. But I was just curious since there wasn't anything holding up between like 75 and 40, if that would have been a quick scalp opportunity.
Yeah, it can actually work out, you know, but as far as I'm concerned, those lines are, especially like you also said, if you're already so oversold, like on a very dramatic downturn, eventually an in-between low will be found. We're not going to $8 in one go, you know. So and more market participants see the dramatic sell-off, and the more people agree to not short as much from here, but long, what do you know? Then they also take short profits, close their positions, which is a technical buy and a long, and others are longing, and then eventually that drives the price up. So chances to shorting after losing this on a daily closure basis are not super cool, and could rather result in a scam closure, which then immediately is followed by an accumulation closure, and then you're trapped in a short from the absolute low and kicking yourself 2 days later why you didn't long instead, right? So
Did you zoom in on that level you have around the $100 price?
on the 4-hour or 1 hour?
It was there on the daily, but I don't know if it's still there. Let me see. I just had a question because you just talked about the high certainty trades, and in this case we have, like you said, it's engulfed. You have two of the same candles in a row, and it's with the trend. So would that not be a high ability trade?
Yeah, absolutely. Doesn't always mean that it's like the trade of your life leading to a Lambo, right? It just means you get the entry to the exit within.
Can afford lunch tomorrow.
Yeah, exactly. And if you add up those trades on many assets on timeframes, then that leads to Lambo money or vacation house, holiday house money. It's not more than this entry to this exit, right? It's a $3.30 move, but depending on your capacity, that could lead to decent gains, right? If you add some leverage, that's 3%. If you feel conviction about putting a 5x here, although I would rather not recommend anybody to lose leverage, but I know that basically everybody does. So I just don't want to recommend it like others do, because that could lead to very accelerated losses. But let's pretend you feel comfortable and you do a 10x, then chances of getting up here are not super high. If you do a 5x and you're only playing on liquidation being your stop loss, if it's an isolated trade, then yeah, you have very high chances of this playing out timely, given what we said, the rules, very soon, even if it overshoots a bit. Not very likely that it even goes up here, but just reject, get to the exit, and then you're done, so yeah, super valid trade. Engulfed, fully range deployed with the trend. It's not beyond any trend line or next break level. It would hurt more. Let's pretend again for a second that this wick would be longer. Let's say this was your daily that is engulfed. We have such candles. Then the view changes a bit, because your entry would hit somewhere here, let's say. Your entry hits here, so price did already go up. Let's say here. And now your exit is back beyond the trend, beyond the break levels that are here. So when price comes back up here, again, pretending that was your daily and that was a wick length, you would at least, and I guess Sin tries to explain it a bit more often lately in his videos. So when he talks about it, about especially partial TPs, eventually it will get here, but you want to make money and you want to preserve your capital, and you maybe can even take the same trade multiple times, or you just want to be a bit more risk averse and all those sorts of things. So being bold about saying, no, I'm going to take my full position to the exit and that's all I do, might not help. So taking like a partial TP at those then potential supports, being this monthly trend, this break level or this break level again, like TP1 here, TP2 here, TP3 here, and then be happy about what you got, because the trade is valid, and sooner rather than later it will probably play out, but it can fuck around a lot in between before it actually gets to your exit, right? And this can cause a lot of stress and sweating, and you don't want to do that to yourself. So yeah, why not take profits on the lines that are in front of you if we were to have this, I'm just making this up because the candle is actually not that long and the trade is as it is, absolutely perfect. It's above everything. It's a whole fully deployed range with the major trend. Go for it. Do we have another good example of trades that are not super great? How about that 4 hour long I guess that's also not like super awesome. If I draw out, let's see what we did get here. So that's the interior. Oh, now I got the word back. Interior, that's exterior trend. Okay, that's exterior trend on this candle. Let's make it orange so you can distinguish it from the monthly trends that are in place. So these are my 4-hour trends. Oops, it's on the wrong candle anchored. And then you go down here and cycle through the downtrend. Dip, 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 dip. This one here, it's a bit annoying one, disclosure, but it is what it is. So if you have this long created here, right, you have an encouragement, you form a hold level here. Which creates a long. So check for the first rule. Second rule, also confirmed, right? You have 2 candles consecutive into the same direction after the trade was created. But 3 is questionable. You're trading against the trend. You're trying to long. But nonetheless, there are obviously some longs. But again, why was this long probably bad? Given you mapped out your even only local / major trend in this case. If you try to long this, if I remove this hold level for a second so you can see the fib line. So if I use the arrow keys again for entry at the body, exit at the 1.618 level, if I move it, didn't hit the entry yet, didn't hit the entry yet, and so on and so forth. Then you hit your entry here. And very nasty one because it's kind of within, but it's kind of not really within under the trend. It's still sitting above it. So what do you know? It didn't even complete yet. It did miss. Well, hard to draw with this tool sometimes. So it tapped the entry no matter what. It went up, opened the next candle, and then got stuck further under the downtrend, you know. It kept dying under it. So what I'm trying to say is just again what we've seen earlier also, that your exit should not be beyond major levels. And if so, take at least profit at other conditions that you could find in this case, which is, yeah, looks like hindsight, but also not really if I zoom in on the 15-minute to determine some earlier exits. So you can long this. Obviously, there was some upside, but how do you decide then some partial TPs? Yeah, you can do that with break levels of the top range that is forming right under your downtrend because your exit is beyond your trend, beyond your major trend. So you don't want to risk of being bold about, yeah, I take my full position to the exit and I'm going to get it because you seemingly don't always get it, but you still can make money on that trade as an entry, just not to the full exit. So partial TP would latest go at this low here, right, of the top range on the 15-minute. You have a break level here, and yeah, you take, I don't know, 30%, 50%. Everybody does it a bit different. 50% also always feels good. Then you have already checked in a lot of gains. If you have 3 TP levels, then maybe it's 50%, 25, 25, or 33, 33, 33, whatever. But nonetheless, you partial TP some here, and then you can put your stop loss at the entry and let Destiny decide if I mean, in hindsight, we knew it didn't go to the exit, but you will also find situations where it will dip above the trend just a bit, just like here, and then falls back below and respects the trend. You cannot know that upfront. Hence, the safer play is to take at least partial profits at the break level or the resistance that you can find, compared to trying to be bold about taking your full position to the full exit, not knowing what it will do, because nobody really ever knows.
Right, and then just the principle with the high probability trade with the engulfment and two of the same candles, does it have a higher probability with higher timelines, or is it the same across all timelines? Time frames, I should say.
Despite some exceptions, I would say that definitely the higher time frames also have stronger impacts on aggressiveness of buying and selling on hitting those levels. So if you hit monthly levels or weekly levels, they usually resolve sooner rather than later to a price reaction. Doesn't mean that they always play out immediately. Doesn't mean that they cannot fail given the sad conditions. If you're trying to long in that major downtrend just now, like I guess we have a pregnant example on the 2-week on Bitcoin, which is allegedly high probability, but yet still not in play or not playing out properly 2-week. So we have a hold level here on the 2-week, have a fully developed range, right? So we have the engulfment, we have 2 candles consecutive, should technically be also like with all these top heavy range, allegedly providing some support. Could say, yeah, that's a long. But if we zoom in now, then let's see what actually happened. Where's the entry? Always overrides the hold levels with the fib completely, which is a bit annoying for visibility. Yeah, right. So we hit the entry and actually fell through the entry. Yeah, what do you know? Might just play out a bit later. I don't think they're going to zero. And you're just, if you hit the long here and are still in that long, then probably hurts a bit, but it's also not super likely that it will just fall through from here. And like with everything, it's probabilistic and there will be exceptions. In this case, I observed it earlier. I didn't take it because I didn't feel like we are already stopping at 69K, and can I determine the perfect rule now why this exactly happened, other than there's panic selling in the whole market? No, it's, to me, it's as simple as that. It's just a radical sell-off, and as good as algos are of respecting all lines when price is going normal, if there's panic sell-off, then that's as good as panic buying, not respecting resistance on a hold level. But also, like, if you have a tight stop loss, if you took already plenty of trades that were profitable, then one wrong trade will not kill you, right? Because if you follow the amount of rules to the amount of trades and take them to the bank, you print more successes and gains, then the exceptions are not your rule. It's just when you, I don't know for what reason, only hit the trade on the trades that have like many exceptions in the first place, and you try to trade those, then your chance of getting out of ahead in time is also lower. So yeah, I guess we will go to 71K eventually when we found the bounce level in the low 60s. But fair enough to say in this case, it was a high probability risk, high probability trade or low risk trade, and it didn't play out immediately. Then that's a fair take, right? I mean, we can map it out here on the 4-hour and see what we get. Despite the fact that we already know it didn't work yet, we can also potentially simply map out, draw out the lines that make it more understandable. This one here, this one here. This one here. Do we hit the trend there? No. There's a lot of interior trends. Okay. So yeah, you had the trend already in place from this closure. And if you were to hit the entry here, then your exit would also already sit behind this. But in all fairness, I don't want to just find lines and say like, obviously this didn't work out. It's a fair idea to long a 2-week hold out of a low risk and high probability trade, especially after already being so oversold. Yeah, I find reasons why it didn't work, but it's also okay to say, yeah, but trend lines eventually get broke and you hit that long, maybe you go a bit deeper and then you actually break through the trend and go to your exit and then only reject here, right? Fair enough. Maybe too many people did it and that's why price loved to go much lower because everybody was longing already. Also fair to think about those things.
Everyone's watching your videos and Sin's videos, so now everyone knows.
What do you mean? Sorry, couldn't follow.
Oh, just that you said because everyone was longing it, that's why it didn't go up. It's because we all followed your videos, so now we all know the secrets. Yeah, thanks. That's been very helpful.
Yeah, mind you, I don't want to pretend like I can predict why every single trade did play out or not. Otherwise, I would probably already be a billionaire. If I find conviction in a trade to a certain degree and then I hit the long like I just did on that 62,400 to justify it and scalp it to the break levels that I have shown earlier, then hey, then I did already make money. And that's good enough. And finding those trades is much more valuable than understanding every single time a trade in hindsight played out or did not play out, because yeah, backtesting is very important for exercise, and I have many thousand hours behind me of doing this, but it doesn't mean that I earned a crystal ball on a scalping level, which is much more stressful than swing trading the larger stuff, like high conviction stuff. Same as to have the conviction between 60 and 62K. and then hitting the long a bit earlier, of thinking, yeah, they are a bit nasty sometimes, and they don't go to my targets most of the time immediately. They rather like to troll around before in both directions, and knowing those things and forming trades based off of it, based on levels and lines, is much more worth to me personally, because I can also explain it to others and I can use it for myself, obviously, to make actual trades out of that are hopefully understandable why certain did work or did not work, or why I would take some and would not take some. But it doesn't exclude that if I say, yeah, I would take that trade, that trade has 100% win rate. No, it can fail as much as if I find a trade where I say, I wouldn't take that one for these and that reasons based on the rules and the framework, but then that trade perfectly plays out immediately, so both things happen, and there's not really a way to get rid of that fraction of both ways, like false positives and how you say that, false falses,
Yeah.
false negatives.
False positives.
Yeah. Yeah, exactly. Yeah, like both. Yeah, right. False positives and false negatives. It's just if you make enough trades that have the highest chances of playing out, then it will not kill you if you get false negatives or false positives. I mean, false negatives are not happening anyways because you're not taking trade. But if you have the false positive, you need to be really unlucky to if you exercise a lot and you understand it more and more, the more you exercise it and draw out your charts and understand, and then come back to your chart and see later and be like, oh, look, it followed all my lines. And then that creates some degree of conviction, and then you start to take trades of your lines in the present, and then they play out more and more. And then you get an exception trade later that does not work out, that is paid by the gains from before, so it will not kill you and be like, oh, why didn't my drawing work or whatever. Yeah, there are limits to every idea. It's just all probabilistic. Even a 1% chance can happen. All right, did we hit anything else in the chat? And by the way, thanks for asking all the questions. I like those conversations a lot.
Thank you for answering all the questions. It's been very helpful.
I hope so. What an absolute bloodbath. So crazy. And stocks are still kind of chilling. That's the only weird thing to me. They either kick off like
Really?
a very brutal wave of sell-offs when Nvidia is just hanging by the thread on its major levels. If this one here is lost, so buckle up. Buckle up. Like 150.
There's a temptation to short the SPY. S&P.
Yeah. 100%. It's like the most overbought dumb shit in history. Even by me talking like raging mad stuff, no, by actual metrics. It's like absolutely nuts how much money kept flowing in and slowly rolling over. I mean, these are very old lines, and you can see how it got lost on that dip. Hit this VWAP band and trend line perfectly to be the low, and now it's doing like this typical backside retesting, trending below the trend, but keeps trending up, right? And it's like just doesn't want to reject until it then actually does, and then the unfold gets like really nasty and quick eventually. So what do we have here? Is that my monthly? Oh wow, it even went much higher here. What are these RSI lines from? Is it daily or monthly or weekly? I guess monthly. Yeah, but you can see how the momentum kept dying off. That's why I have those arrows stuck in between those lines, and it's just about to let loose. And if this low is lost, this one here will kick it off already a bit. This one, I guess, will not hold a whole lot. Find a bit of bouncing here, then slowly roll over. Maybe if they want to do it for a bit longer, they troll again, retest this, reject, and then go actually lower before. Then you have these highs here, will fall almost immediately to 6,000, no doubt. And then 5,700 is the next major level, and then 5,400. Let's see if they really wrap up the bull run and actually fuck over this year, and then do the long overdue high time frame correction, because this steepness of uptrend cannot be maintained, if you ask me, forever. So yeah, it's all there to actually die. You can see how it was living in the upper 50 percentile of the RSI while losing momentum. So that's like the mother, father, godfather, and all inheritance levels. It's a whole tree of bearish divergence, if you want so. So yeah, I want to know how much options they were stacking since October. What is it? September. Yeah, might have been stacking already since August, but so basically since 4 or 5 months, yeah, 3, 4, 5 months, stacking options for the lower prices far out. And then they roll it over and execute it, given all the metrics that we know of. VIX is also pumping already nicely into resistance a bit. Yeah, fair enough. So the volatility index, but yeah, it will not. Again, I don't have a crystal ball, but we will see this again. I don't know when, but we will get it. So yeah, JJ, let's fucking go. 702. I would say so. That they are for sure far overdue to do it. Stocks didn't even really sell off yet, right? I mean, they made their tops. That's kind of undeniable. Unfortunately, didn't hit my Nvidia target of 220 really, but close enough. Tesla dream exits were given all the time when they happened. Couldn't talk more about it without being annoying. Still very proud of one of our mods. Hit the GigaChat exit of 495.70, something like that. Which is like godlike exit. Following TA within not even 1% of the all-time high. So that's a big win on a financial and personal level to know that you can do this if you learn and listen and actually execute. All right, guys, we're almost going for 3 hours. I don't know if you have any further questions. Again, also completely unrelated, asking basics, asking about specific asset, whatever you want. And if not, I would wrap up the stream.
What's your second favorite color?
Oh, I was
And
never
dark
asked.
blue.
Dark light blue. What's my second favorite color? Good question, actually. Never thought about this. Yeah, green is a bit lame because it's just a mix of blue and yellow, I guess. Oh, I like Burgunder a lot, actually, the color that's almost like this, maybe a bit darker.
All right, man. I'm gonna bounce. Thanks so much.
Yeah. Thanks for coming, everybody. I'd say let's wrap it up. It was a lot of fun. I hope you got some ideas from the charts. I hope you're not too scared. I especially hope you're not hurt by any of your positions, really. If so, stay tight, stay strong. What should I say? It's nasty. It's a blood sport, as we know. Yeah. And if you don't know what you should trade at the moment, then I could really not recommend you anything else but exercising. Use that time for learning. While there's nothing to execute as per trade, at least if you don't think you can do it at the moment, then that's your time to learn, to then be ready when it's your time to trade again, right? It's like this endless swing of actually executing trading and also in between then learning trading. So yeah, look at the content that we got, look at the live streams, sessions. Again, 16 and 18 got a lot of good feedback. There are more with more content, and yeah, otherwise wait for Sin's updates of what he's thinking, and yeah, keep your head up. Thanks for coming, everyone. Always looking forward to it and appreciate your coming. And if you have any questions in between during the week, feel free to post it in the Discord forum I set up and live stream questions. And yeah, other than that, let's see where where the charts bring us next. So thank you very much and have a good one wherever you are. Bye bye.